Square.
Content, information, and opinions expressed during the related show are those of the show personalities and guest alone, and not those of Vic Canellis Media Group, its parent, affiliates, or stations. VCMG Live is not responsible for any content, information, or opinions expressed. User bears full responsibility for their reliance on such content, information, or opinions.
Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live, 888-994-4995. Studio A.
Hi everyone, welcome to Making Money with Laura Sanders, and I'm Laura Sanders. Every week we talk about something to help you make a little money, save a little money, or maybe just help you navigate this crazy world that we live in. Today we're going to talk about mortgages. I know how much you love talking about all these things because people are always asking me, what's the rates today? Well, they change every day and there's just so much going on in the world. Today we have Cliff Bernstein from Fairway Mortgage. So welcome, Cliff.
Hi, thank you, Laura. Great to be here.
Well, so, it's funny, you and I were talking a little bit before the show was getting ready to start, and you said something to me that was a little shocking, and we're going to talk about that, about how we should be buying condos. So we'll talk about that.
Okay. But
first, I just want to, talk a little bit about the company that you work for. I've heard you say in the past that it's one of the best companies out there. It ranks on like a ranking system. Yeah. So can you tell us a little more about that?
Yeah, well, I'm with Fairway Home Mortgage, and like I always say, Fairway is the largest company that no one's ever heard of. Because truly, we don't do a lot of advertising, and we're all basically referral based. But in reality, we were a top 10 lender last year in terms of purchase volume.
Okay.
So we're very large, we're very good at what we do, we're a direct lender.
So explain to the audience what that means, because some people have no idea what that means.
Okay, so we're a direct lender, we're the source. We're the ones that are providing the money. So whether you come to Fairway, you go to a retail bank like a Bank of America or a JP Morgan Chase or Wells Fargo, we're all lenders. We're all going to close your loan, we're going to fund your loan with our money, and then we have the task after closing to sell that loan, to sell that paper to an entity called Fannie Mae. We all sell those loans to Fannie Mae, but as a lender, we're funding it with our funds, we sell it to Fannie Mae, they give us back our money so we could lend again. They create the liquidity. But when you're working with a broker is basically just a middleman.
Okay.
The middleman between the lender and the client. So they're not lending their own money.
So why would you not want to go with a broker, or why would you I mean, you're obviously with the direct lender for a reason.
Right. Well, years ago there was more of a reason, in my opinion, to work with a broker, because there were a lot of different, there was very plain vanilla. If you didn't fit into the box of what the lender was offering, it was very important to have a broker so he could go out and find you different options. But for my company, as an example, with a lot of other lenders, but I know my company, Fairway, if we can't do a conventional loan or a conforming loan and sell that paper to Fannie Mae or Freddie Mac, we'll provide other options.
So it's like being a mortgage broker.
It's
That's
like
not being a middleman.
Right. Well, I could put on basically my mortgage broker hat, but stay in house, and I still have programs that we're not going to sell it to Fannie Mae, but we will do a bank statement program, a DSCR loan, basically like a broker option in-house, and rather than selling it to Fannie Mae, we'll sell it to a private equity firm, a hedge fund, things like that. So you don't really need a broker. And in my opinion, a broker may market themselves by saying, hey, I'm going to go out and get you the best rate. But when you're dealing with a third party...
They're pulling your credit everywhere, right?
Well, I mean, listen, if you're going to deal with a broker, that's another individual that has to get paid. So who's paying for this broker? usually in terms of maybe a higher rate or higher fees. So the advantages, listen, brokers have advantages, but in my opinion, I'd rather work with an in-house lender, have the control, have your underwriter right next door, and do everything in-house.
Okay, that makes sense. So what would you say Fairway's best product that they have?
Okay, so we're very, very competitive in terms of pricing when we talk about products.
Okay.
So the plain vanilla 30-year fixed, it's probably about 60% of my business. And the simplicity, the make sense underwriting.
Makes your life not difficult either.
Listen, I mean, Fannie Mae, we talk about Fannie Mae and we could get into what their purpose, we talk very briefly what they do. They create the liquidity, but they have 2,000 guidelines, all right? Fairway doesn't have any overlays. And what's an overlay?
I was gonna say, what's an overlay?
Good question, and it's a good reason to work with Fairway. So basically, we just talked about Fannie Mae. They have 2,000 guidelines. And I know all those guidelines. But because as a lender, we're all responsible for that loan 2, 3, 4 years after closing. If we didn't dot our I's, cross our T's, they do an audit, something was wrong, Fannie Mae can knock on our doors and make us buy back the loan. Nobody wants to buy back a loan. It's bad for business. It could put you out of business.
Yeah.
So a lot of the lenders have guidelines more restrictive above and beyond what Fannie even wants.
So that they won't get stuck with it in the end.
Exactly.
So how do you guys ever get stuck with them?
That's called an overlay. Do I ever?
Not you, but the company.
I mean, I'm sure, I don't get involved on the back office side of that. I'm sure we do have buybacks.
Okay.
But we do good loans. We have smart underwriters that do make sense loans, but we know we're going to be able to sell, that loan to Fannie Mae. We have a great relationship with those entities, Fannie Mae and Freddie Mac. We know what they will take, we know what their requirements are, and we package it accordingly to make sure it's a good loan and we could sell it and everybody's happy.
So Freddie and Fannie are part of the government, right?
Well, they were quasi-government companies that were set up. Fannie Mae was set up back in the late 30s to create liquidity in the mortgage space back then. And then after that, back in the late 40s, Freddie Mac, which is just the same purpose as Fannie Mae. So they're not exactly they're not government owned, although.
So it doesn't get affected by the government shutdown right now.
They're not affected by the government shutdown.
So people I seen when people are like, oh, our FHA loan's going to close because the government's shutting down, and.
Yeah, I mean there are some delays, especially if you're going out and if you need flood insurance. That's controlled by the government. So
that I heard is an issue.
Yeah, that's an issue on that end. But I haven't had any problems yet. So hopefully they'll have this resolved.
Don't we have other flood insurance policies? But that would be our insurance guy, I guess.
It's an insurance question. But flood insurance is again another plain vanilla type of situation. It's not something you're going to shop around for.
But they do have options, There
are some, they're coming out.
There's other options,
with some more options, but usually, again, that's an insurance question. But usually they have, all those options that you could that will work for you. It's a lot different than the regular hazard or HO3 coverage or HO6. Yeah.
All right. Well, we're gonna go to commercial break, and when we come back, we're gonna talk about why is it the time to buy a condo.
Very passionate about this.
Cliff says it's time to buy a condo, so maybe we're going to go buy a condo this week.
Let's do it.
Stay tuned, we'll be right back.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FRIPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our #1 priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi everyone, welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. Today we're here with Cliff Bernstein from Fairway Mortgage, and we're talking about what's going on in the market, what are interest rates, and condos. Condos have been like the biggest thing that everybody's saying, don't buy them, don't buy them. Cliff says buy them. Why?
If this was a conversation last year or 2 years ago, I would not be singing this song. Okay. But I was, and again, it's been a struggle the last few years on condo. I mean, it's only.
Yeah, because now we have to get the, when I go on an appointment and I tell people, I need to see your budget, they're like, why? And they think I'm being a pain. I'm like, I also need to see your insurance to make sure you have 5% deductible rather than 10% deductible. I need to see if you have reserves. Then, you know, and then of course, obviously, do they have a minimum down payment requirement? And then it gets even, it's just so much.
And then you overcome that, and then you
I need about the structural reserve study and what that looks like.
And then they don't have replacement costs, or you need,
that's
you need
the 5 and 10,
all that good stuff. But, you know, and all this came, I mean, this was always out there. But it was,
no, it really wasn't though.
Until the tragic.
It was there, but nobody asked and nobody cared.
Until the tragic situation that happened in Surfside, and then so Fannie Mae, we'll talk about Fannie Mae. They changed all their guidelines that and one of the problems if you do your inspection, your 40-year inspection, and there's any
or 30
or whatever inspection, and we always require a condo questionnaire form.
Right.
And
we'll say, have you...
Right, and on a standard Fannie Mae questionnaire form, it's going to ask any special assessments, and if it's due to any, deferred maintenance that's needed, and it's deemed that it's a hazard and a safety issue, end of story.
I just had one that
Fannie's not doing it.
There's a code violation, which has to do... So that was a no-go.
But the safety and hazards, I mean, that's just a non-starter.
So you have the structural integrity, right?
Yeah.
Is that the same as the, oh my God, you have structural integrity and then...
With the engineering report?
Yeah, like is that the same or different?
Well, it's all, again, that's not my area.
Okay, so you're not sure either, because it's so confusing,
but
even for us.
The engineering report's going to have the structural integrity and all that good stuff.
Okay.
But again, 5 years ago, if there was a deferred maintenance, and we got an opinion from the engineering that it's safe to inhabit the condo while the work's being done, we could get away with that. But not anymore. If Fannie Mae deems that to be a safety and hazard issue, and if it says that it's a safety issue, it's a non-starter. It's not getting closed. But even more, I mean, you've had some clients, or you've seen reports where people bought condos 4 years ago, 5 years ago, and now all of a sudden they're getting a $250,000 or $300,000 assessment. Yeah. They can't afford that. So that's my base case right now. This is why I think it's all out there. It's all out. The special assessments are out. You have the visibility. There's not going to be a negative surprise. They've done the 40
Right, because they were supposed to be finished by January 2025. Well, now we've pushed up to January 2026 for a lot of things.
Well, do you realize after Surfside, then the city started knocking on the doors of the condos that didn't have their 40-year inspections done? Only after that situation, and they were fining them like thousands of dollars a day until they would start.
No, I didn't know that.
That's what was going on. And not only when they were knocking on their doors, they didn't have their 40-year, they were up to their 50-year inspection that they needed to have.
And that's because a lot of people are like, oh, push it on the back, push it on the back.
No one was being held accountable.
Yeah.
So now they were knocking on the door. So now everybody that owns a condo and a unit or purchased a condo, there were special assessments going crazy, and they weren't maintaining the proper reserves. It was like fool's gold. So basically, you get a condo. Oh, the HOA is so, the monthly fee is so low. Okay, it's so low, but if anything needs a repair, we're going to give you a special assessment.
Right.
So my point is this: the 40-year inspections are done. The special assessments are, the cat's out of the bag.
Oh yeah.
All right. So you're not going to have any negative surprises. They're still priced very, very well.
I have people that bought last year for like $305, and now they're listed at $269.
If you're a first-time home buyer, where are you going to go? It's a great option. Now it's a great option as a first, and you could still, if they have the proper reserves and it's a warrantable condo, a first-time home buyer could still buy a condo.
Explain warrantable condo.
Okay, so a couple of, not to confuse everyone, but what makes a
pretend we're speaking to Mr. X and he's very stupid. And
I'll use the line, I'll talk to you like you're a third grader.
Okay,
I heard that from the movie Philadelphia.
Oh, okay. Talk to me like I'm a third grader.
Denzel Washington said that. So basically, what makes a condo warrantable? What comes to everyone's mind first? Reserves.
Right.
What does that mean, though? I think people,
I say 10% or more, right?
But people always say that and they throw that out there. But
I thought it's 50%. I thought they now need to be at 50%, though.
Well, what we're going to do is we're going to look at your maintenance income or your income, and that's the income from the association fees that you collect each year.
Okay.
So let's say you're collecting on your HOA fees $1 million a year.
Okay.
And that's on the budget. We have to look at your approved budget.
Okay.
So if it's $1 million that you're collecting income, we want to make sure that you're putting away at least 10% of that to a reserve account, basically for a rainy day if there's any situations that need repairs. So on your budget, I'm going to collect your budget. If you're collecting $1 million in income, you must be transferring 10%, $100,000 to a reserve account.
Okay.
And is
that clear as day on these budgets?
That you read a budget, it's as close. Sometimes.
But can you back out? Like I heard that sometimes you can back stuff out.
Right. You could back things out like cable and water and things like that. So if you're taking in, let's say you're taking in $1 million and your transfer is only $90,000 into the reserves. Obviously, that's 9%. You're falling short. But then you see they're collecting for cable and water. And let's say that's $100,000. Now you can take that $100,000 as an expense, take it away from your income. Your income is now $900,000. So now you're at that 10% ratio.
This reminds me of a time, this was about 10 years ago. So my kids were 6 and 9, right?
Yeah.
At the time. And we're in New York for Christmas. Mm-hmm. And I have a deal that's getting ready to close in December. It was supposed to close December 24th. Now I'm gone, right? Here we are. And the lender decides to say, we need the proposed budget for the following year.
Okay.
Because we're closing in December. So it was 10%, and then it ended up being 9.8%.
They changed it. So
for the next year. But we're closing in the fiscal year of this year, but they called for the proposed budget for next year.
Because they said they should have had the meeting, they should have done it, or at least have the proposed.
And they gave it, and it crashed and burned my deal. And here I am on Christmas Eve, I will never forget. And these are just the things that you just never expect would happen.
So that's an overlay. That's what I'm talking about, an overlay, because if they're closing, in that year,
whatever year it was,
we would not have asked for.
Yeah, that would have been 2015.
Right, unless the closing date gets pushed off now.
And that's a whole different animal for timing of when things went on.
It's the same thing with taxes. Like, what's tomorrow? Isn't tomorrow like the final extension day on taxes? I believe tomorrow is the final day.
What does that mean if I didn't do it?
Well, we'll talk.
Am I going to jail? I needed to call my
accountant. On an IRS attorney, but a tax attorney. But my point is, we get a condition. If you're on an extension, show me your extension, so we don't need this year's tax return, unless you're closing a day after the final extension. Then we're going to need that tax return. So same thing with that situation with the budget. So that was unfortunate for you. But my point is, that reserve, that 10% makes it warrantable. If they don't transfer 10%, it's non-warrantable, meaning you can't go to a Fannie or Freddie type conforming loan.
Right.
You got to do what's called non-QM.
And you could do like a 75, 15, 10 loan possibly.
Oh, so basically,
which a lot of people don't know about that.
Right. So I mean, again, if it's, and that's one of the items. But if they don't have the reserves, all right, it's 25% down. Because why it's 25% down is because as a lender, we'll do a limited review. What does that mean? We're not going to ask the question. We're not going to look at the budget because you're putting down 25%. We're not going to ask for the budget. So because we don't ask for it, we don't see that they don't have the reserves.
Oh, okay.
So if they don't have the reserves, 25%, you could close on your condo conforming. But a lot of people don't have the 25%, so there's still a way around that if they don't have the reserves, and that's where you're putting down 25% on the first loan. So, for example, if it's a $100,000 purchase price, you're putting $25,000 down. Your first loan's $25,000, and then we could go up to 90% combined loan to value. I could do a home equity line for $15,000. So you close with a second loan. First loan is $75,000. Your second loan, second lien, is a home equity line of credit for $15,000. You're borrowing 90, which is 90%, and you're putting down 10.
Okay.
So even if they don't have reserves, you could still put down as little as 10.
As little as 10, yeah.
But my point is now a lot of these condos are a great time for first-time home buyers because now they're starting to come up to compliance and meeting guidelines.
But some of them still don't have the insurance.
But now they're starting to. But again, right,
But
you're
that's
right.
not even part of the guidelines.
Correct. So I'm just saying.
And they're uneducated, and we need to educate these. We need to educate these people.
And that's that is really my passion. And that's what
we're here for.
And that's what I like to do. I like to educate. But again, not a lot of people know that. First-time home buyers, they could put down 3%.
Oh yeah, if you're first time, yep.
On a condo.
Or 5% if you're not
anyone
first
else.
time. Right.
Anyone else, not
if
first time.
the reserves are good and if the insurance is good. So I tell people when I go to an appointment, I tell them information that I'm going to ask for up front is going to tell me a lot of information. It's going to tell me if your buy or pull is this or this. So if you have reserves, you have good insurance, and then obviously no liens, things like that, which and that's another problem.
Right.
Why isn't this stuff readily available to us? Everybody's making this so difficult.
Well, that's the biggest problem. And a lot of these associations, listen, there are some wonderful associations, but they don't really move that quickly. And you could work with the greatest lender. They could be on it. They could be doing all the right things. They're making the calls. But when you're requesting the condo questionnaire form and all their condo docs, and they get it back to you a week before closing,
that's a problem.
And then I see, and I've been dealing with a loan that you referred to me for 60 days, and all of a sudden, 8 days before closing, sorry, Laura, I can't close this loan.
Yeah, you're asking up front.
You're like, Cliff, I'm never going to work with you again. You're telling me 7, but there's nothing the lender can do because we just don't have the information.
But can't you ask right up front?
No one pushes more than I do, and my processing team, and there are some great lenders out there that I know that push, but they just don't send. And listen, this happens in maybe a small percentage where they get it to you a week before. But my point is, if we request it tomorrow, they're not sending it to us. Tomorrow's Wednesday, we're not getting it on Friday.
Right.
Thursday.
And so what's a good way for people to reach out to you that are thinking about refinancing? Because that seems to be sometimes, there was a short little period we had. So you got to be in that, let you know that you're looking to refinance because you'll call them as soon as that you think that window is there for them.
Right. And I listen, I monitor that for my clients as well. And listen, I was never a refinance guy.
Right.
Even
you had to be in the 2%.
Well, but even 3-4 years ago, when rates were 2.5-3%, I'm looking at my past clients or other clients that come to me. They're at 3.75. They were 3.5. All right, it doesn't.
I bought my house 9 years ago, and I'm at 2.75.
Occasionally, you'd get a guy that was at 5. I'm like, where were you, in a coma for the last 2 years? If someone was at 5%. But now, I mean, there are clients that are at 7.5%, close to 8, 6.875. I'm not saying rates are going to get down to 2 or 3% again, because they're not going to unless something happens in the economy. And again, my philosophy has changed in terms of where rates are going, where if you talked to me 6 months ago, I would have told you, well, I think rates will get into the low 5s. I don't think that anymore, only because I think the economy is doing better than everyone thought it would do. It's really.
So how do they get a hold of you? Because we're going to run out of time. We're not going to know how to get a hold of you, Cliff.
So give me a call. I'll give you my thoughts on this. It's at 561-213-6852. It's 24/7. Call me anytime.
24/7?
Well, I shut down between 2 and 3 for an hour to take inventory. So 23 hours.
Okay.
All right, but yeah.
And if you're looking for the best realtor out there, somebody that has a lot of experience, can get the deal done, and knows about all this stuff, because you do not want to get stuck with your pants down, I promise you. Give me a call, Laura Sanders, RE/MAX Direct at 954-650-0827. Again, Laura Sanders, RE/MAX Direct, laurasell.com. And next time we'll have Cliff, and we're going to talk about investments and what are some of those products. So until the next time, have a great night.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.